borrow, and then I repaid, and then I borrowed a little bit again, knowing full well that there's a security blanket there if I run into trouble again, but also on the same token that I've still got money going away for, when I get old and decide not to work anymore, which, I don't know when that'll be.
Okay, because you clearly love what you do.
Some days, yeah.
I hear you.
Yeah.
So when did you actually get started with him? And why did you decide to go with this as opposed to some other investments?
So the reason I went with this is it keeps accumulating for me. As a small business owner, I don't have a pension. So it's my way of putting money away in the future that I can draw on, either getting, a monthly amount, an annual amount, or something. It was a long-term investment for me, knowing that obviously when I'm a little bit older, I'll need something to live on. The nice thing about it is it seems to be growing quite well for me in terms of, reinvesting the premiums and such. So I chose it as a long-term play rather than a short-term. And I'm extremely happy.
Okay, nice. And what kind of returns have you been seeing from it since you started?
I would have to go pull the paperwork, to be honest with you. It's not something that I have memorized, but it is doing a little bit better than some of my other stuff that I've got tucked away.
Okay, mind me asking what other stuff you have tucked away, so I have an idea of where you are in terms of that.
I have an RRSP with Great West Life that gets topped up, and I have a Manulife RRSP as well that I inherited that just keeps accumulating and getting topped up. So by no means do I have tons and tons of money tucked away, but I'm trying to think about when I'm a little bit older and decide I want to retire.
Understood. So you're already putting this away for retirement for long term, but this pandemic came around and you really were able to test it.
It actually saved my butt. I'll be honest with you. I was able to borrow a little bit of money, satisfy my landlord. I was also able to borrow a little bit of money to take care of the government. And then knowing full well that once I pay that back, it's available again. So, the sooner I pay it back, the sooner I can kind of borrow against it. But knowing full well that I'm not really hurting the overall value of the investment.
Right. It's not really affected. You're still earning at the same rate.
Right. And the other thing too is like, if you were to run into a situation where you needed a little bit of money quite quickly, they actually deliver way faster than a financial institution. I got checks in 2 to 3 days, which was helpful because like the people who were squeezing me for money wanted it fast, and Carl was able to get it to me fast and kind of put that situation to bed.
Okay, so you got us checks, so it wasn't direct deposits into your account.
You can get direct deposit. I'm not that organized, I'll be honest with you. So it did come in the form of a check.
Okay, came in the form of a check. Okay, that sounds pretty good. Oh, I did see in the case study, you started with a certain amount and then you increased it. Of course, mind me putting that out there. I'm not too sure, Carl, if you let him know the information in the case study.
Yeah, sure. Jason, if you don't mind, actually, can we talk about the two policies?
Yeah.
Yeah, thank you.
So
Mikkell, so what's your specific question again?
So I saw that he started off with a certain amount, I think just under $500, and then it went up to $1,500, I think. So what explain to me when did you decide to increase it to that, and what was the story behind that?
So we originally started with one policy. I think it was roughly $500. And it was to kind of, get started, test it out, obviously compare it against a few other things that we were doing or that I was doing. And then I think it was maybe a year later, Carl has dated.
that's 2018. The first policy was started 2015, and after 3 years. Yeah.
Okay, so
Yeah.
so
Good
3 years.
sir.
Yeah, so 3 years later, I decided to fold one policy that I was carrying from when I was younger and put all the principal or put the investment into the second accumulator account that I created. So I just kind of moved one to another because I was happy with the way things were going.
Very nice. Yeah, I mean, the fact that I see the increase here means that you have full confidence in this.
Yeah, I literally have no issue. It's been very good for me. I mean, I'm not sure what you do for a living, but just having a little bit of a security blanket, as well as knowing that I'm investing for the long term, is super helpful.
Yes, trust me. During the pandemic, it was, to an extent, I'm in digital advertising and digital production. So whereas I got work coming in, like a quick burst of work, it slowly slowed down because everybody basically, after a few months, they just started running out of money. Yeah. So I had to really tap into my mutual funds, some savings to really keep it running, you know? So I understand the benefit of that.
The one thing about tapping into the plan that I have is it's not like financially punitive. Like if I cash in an investment or I go to the bank and borrow money, it costs me a fair bit of money. I mean, there is an interest rate that you pay on your amounts, but they're willing to take it monthly with your premium. So it's a slower payback. And then for me, being in a seasonal business, when I'm busier, I tell Carl, you know, could you please take a little bit more money this month to get things paid back? And he can do that.
Yes.
Okay, nice. So it's flexible like that while still
very flexible.
That's really nice. That's really nice to know. And I have to ask you, Canada is very serious about its taxes. How has it been for you as a tax shelter?
It's been good. I mean, I did claim that I borrowed the money last year, but it wasn't punitive.
I just wanted to point out the money you borrow out from the policy is tax-free.
Yeah.
That's for sure. Okay, that's your question?
Yes.
I just wanted to know. It's not income. It's not taxable income, no.
It's not taxable.
That's very good.
Well, that's good.
Very exceptional.
That's very good because especially when you're borrowing a good sum, it could come back at you. So that's very good to know. And Jason, thank you so much. The last question I have is, how is it working with Carl? I know he's on the call right now, but feel free to let me know.
Well, he might not be listening. You never know. No, Carl's very responsive. I mean, my favorite thing is if I send an email in the morning, I have a response by the middle of the day. You know, I'll get emails at all hours of the night if I have some questions. So you're in good hands, and just know that you'll get the information that you need as soon as he can get it. Sometimes dealing with a big business like Sun Life, it takes him a bit to get the information from them.
Right. So they're the bottleneck.
Honestly, I'd say you have nothing to worry about.
Okay.
Thank you, Jason. I think I can do better. That's why I installed some software to manage my own time. You know. Right. So I think I can do better.
Yeah. No, you're good.
Okay. So I think your time is tight. I think, Jason. Is that everything, Mikkell?
Yeah. I just wanted to get an idea of his experience and how it's worked for him, and it sounds like it's pretty good. Yeah. And Jason, you're doing awesome work. From what you told me there, so keep it up, and thanks so much for your time. Huh?
Okay, thank you. You guys have a great day.
Yeah, thank you. Thank you, two of you. Thank you.
You're welcome. Bye.
Bye.
I'm still here.
Yeah, I'm still here. So it sounds good. I would like to start just to get started, and of course I'll raise my amount. Is it possible